is evident from the today's fall. It is quite evident that the concerns pertaining to the domestic and global economy are actually looming, and investors are getting nervous, and that is why we have seen good amount of profit booking in today's session. I think a lot of sectoral churn has happened in the last few days, in which we have seen that IT stocks and pharmaceutical stocks, there have been a good amount of buying. At the same time, even the export-oriented stocks were on the sell sides in today's market. Infrastructure stocks are also down. I think the key concerns pertaining to the domestic markets are the weakness, persistent weakness in the currency, which touched in today's trade. I think rupee touched new low of 71.40, and there is a continuous amount of buying in the crude oil prices. Together, these two things are putting quite a lot of pressure. Looks to put quite pressure on the inflation front also. And if you see the crude oil prices, higher crude oil prices are also making many manufacturing concerns. There are concerns about the high raw material cost also. So with regards to, I think, the international markets, I think there is no respite. People were of the opinion that in the next two meetings there may be some talks between the US and China, but I think that is not the case now. We may listen to the more amount of goods coming into the picture in terms of US would go ahead with putting more tariff from the Chinese exports on the Chinese export side. So largely, I think the sentiments are poor as of now. If you look at the internals, I think mid cap and small cap stocks have fallen quite a bit higher than the amount of selling which has been seen in the index. In good mid caps were seen correcting to the tune of 4-5-6%. Also, the Supreme Court ban on the construction activity in the major cities took a toll on the markets, and there has been expectation that the blanket ban would put developers and the material companies supplying material for the development and construction activity would face pressure. And in today's trade, we have seen good amount of selling in the cement stocks, and all the realty stocks were anyway in pressure. So largely, what it seems to me is that the pessimism has started taking toll on the markets, because it was quite evident in the last few sessions. There was some kind of disparity between the market gains and the concerns that were looming in the domestic and global arena. I think there was some disconnect, and in the last 2-3 sessions, now we can say that the market has started taking cognizance of some of the major concerns which are panning out across the globe. There are concerns that the trade policies may hamper the global economic growth. People are looking at the GDP data. I think the GDP data came around 8.2%, but we have to look what lies ahead. And the PMI manufacturing data shows that there is a continuous fall in the manufacturing activity as far as India is concerned. So I think fingers crossed. But at the moment, I think markets have to adjust to the reality, considering the fact that we were at a huge amount of premium pertaining if you compare it to the historical levels and with the peers in the Asia. So overall, I feel that going forward, I think some amount of weakness will prevail in the markets.